What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and the trading method we use can be implemented with any company that's traded in the U.S. stock market. So make sure you hit that like button, and if you enjoy this video, it really helps the channel grow. Many thanks to those who continue to tune in. If you haven't already, make sure you hit that subscribe button and the notification bell as well. That way you are notified when we release bonus content, the content aside from our nightly and weekend videos. The nightly and weekend videos, they do focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leap trades. So if you want a deeper dive into how exactly we set up our charts and the trading levels that we use, check out the bonus content on our YouTube page. There's a couple of videos that dive into those a little bit deeper. And, I really encourage you to just watch the full video if you are interested in more than just the triggers and targets, because, we do give the triggers and targets, but we give some other pretty good insight into the price action on all time frames. So let's go ahead and get into the agenda for today. We're going to recap the price action for Monday, December 1st. Then we'll zoom out like we always do, take a look at the week, month, quarter, and year charts. Look at the price action there and make sure we're not too zoomed in and focused on those small time frames. Then we'll zoom back in to set our 4-hour markers and the triggers and targets for Tuesday, December 2nd. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year. So if we just look at the chart for today, actually, oops, I didn't have the right chart up. Let's go ahead and get today's chart in the 5-minute. This is what we are looking at from a scalping perspective first, just kind of how we evaluate price action, especially early on in the morning. And if you're not familiar with this channel, what we do is we look for, first we have to identify the opening print or the first traded price of the day. And then we want to look for higher lows at or above that opening print to get into calls, targeting the overnight high and previous high a day as, the exit points. If we get price action to the downside, then obviously we're going to be looking for lower highs at or below opening print, and we want to look to get into puts, looking for overnight low and previous low a day as our targets, right? So here we have today a beautiful example of, the higher low at opening print and how that, you buying calls there ended up being a profitable thing this morning. So you can see, obviously, we opened here at 39.59, so our opening print line is here. We pushed up. Got a slight rejection off of last week's high. That's this solid purple line here. Again, if you want more information about the color coding we use for our charts so that we can quickly and easily identify certain levels, make sure you check the bonus content out on our YouTube page. But we got the push up, a slight rejection off of last week's high. And then you can see we got the higher low basically at the opening print level, right? So once this candle closed and we got price action that went above this candle, locking this in as a higher low, we went ahead and entered some calls for next week at the money. We did purchase a couple in the money as well, but a majority were at the money. And you can see that we pushed up, we made a higher high, and then we made a lower low. A higher low. And with that, we did continue to push down, right? This is kind of like a soft higher low, higher high, right? Because it's part of a 3 candle or a single candle, an engulfing candle. So you want to take those with a bit of a grain of salt. So we continued to slide down slightly and make basically a lower low compared to this candle, right? But we're still in good position as far as above last week's high. We're above opening print. And we're above the previous higher low, right? So the solid higher low, right? Remember, this is more of a soft higher low. So with this candle, we were able to put in another soft higher low. But then with the 2 candle, the 2 up candle here, that really locks this low in as a higher low on the 5-minute time frame. So for all intents and purposes, we had a higher low here, continued to move up, move your stop up to below the higher low. We did push down, get another higher low, and pushed up to the day's high. At that point, We were still holding all of our contracts, looking for a possible close of the gap from what was that, Thursday, I believe, of last week, or I'm sorry, Wednesday of last week. We'll go back and look here in a second. Looking for that gap close, already reaching the targets that we had overnight high and previous high a day. So I guess you could say we were getting a little greedy, just from the standpoint of, normally once we get to that second target, sometimes the overnight high is above previous high a day. So whichever one is second, either overnight high or previous high a day, we do usually unload about 50% of those. But we're riding good momentum from last week. And we knew we had solid support below. So, just kept moving the stops up to the higher lows, eventually getting stopped out around here. So we did get a majority, almost all of the move there. And we didn't top tick it, but that's not what we try and do. We don't try and pick tops and bottoms. We just take the proper triggers, right? So once we got the lower low here, we went ahead and exited a majority of our position. And once we made the lower high here on the 5-minute, we went ahead and exited the rest of our position for the in the money calls. We kept I think 3 of the at the money at the time calls for that expire next week. So kept a few to swing overnight. Right. We don't just look at only at the 5-minute all day. So if you look at the the 1 hour and the 4 hour, these things are just helping to provide more evidence as to why you can stay in these. Right here we have on the, let's get a little cleaner chart here on the 4 hour. Right, we essentially made a soft higher low here. So stayed in that in the trade, right? Another reason to stay in the trade. But what we did notice towards the end of the day is that we've got this green 3, red 2 up, or failed 2 up, right? So that brings into the picture a possible 3 2 up 2 down reversal, at least for that first 4 hour candle in Tuesday's trading, right? So we want to definitely keep an eye on that. But we did close basically right at last week's high, so we want to continue to see that push up. Hopefully this gap that we closed right below will act as a magnet, and we actually fill it, right, as opposed to rejecting off of it. So we'll see how that goes tomorrow. Just got to continue to be patient. Again, we are just really at the beginning stages still of a reversal of the downtrend on the 1 day. Let's go ahead and bring that chart up here. All right, we can see that it was lower highs, lower lows, lower highs, lower lows, all the way down. Right, we pushed up. We finally got this higher low, albeit still a soft higher low, right, because it's part of a 3 candle, right? So we want to continue to watch this, and especially the daily lower high line that we have that coincides with last month's 50% level. Right, we want to watch this. Do we reject and pull back below, possibly coming back to the market maker's expected move low and filling this gap from last week? That could be something that happens. But right, until we get a solid higher low, I'm not going to have quite as much confidence in the uptrend being stuck, up, or solidified going up. Right, we could still get some sideways action here. So until we get a solid higher low without a 3 candle, if we get a 2 down and then we go 2 up the next day, I'll count that as a solid higher low. But at worst, we're neutral, right? Just trying to continue to be patient, right? We've got plenty of contracts for January 26 and beyond. So there's no rush to really get into too much from like a midterm perspective or buying new long-term leap contracts at this particular time, right? You can definitely dip your toe in those contracts. You should have done that down around the soft higher low here. After that, it's just kind of, I guess you can still be getting in, but we've got to see what happens as far as this high up here. But again, from the day perspective, we are still just at the early stages of turning the trend around. So I don't want to get too far ahead of my skis. It may be a little bit more reserved than some of you all out there play, but that's just how I personally play, and that comes from years of trading with my partners, right? So we all kind of trade like that, and kind of helps protect capital a little bit more. Yeah, you might miss out on a little bit of the upside, but again, we've got plenty of contracts for January 26 and beyond, so we're not too worried about that. We're just continuing to play intraday, making sure we get that good move, one good move of the day, maybe two if we have a choppy day. Just getting some extra money on top and then getting out, right? So let's look at things from the week perspective. Right. So again, we've got the higher low that was created, I guess 2 weeks ago now, right? I guess last week locked this 3 weeks ago in as a higher low. I'm sorry, 2 weeks ago and as a higher low, but we're continuing this bounce, right? Bounced off of the year flip, so we never turned the year back red, right? We stayed above that 11-week range of that bull flag that we were in from the April 7 low, right? So that's very major support, and it's a good thing we saw not only a bounce from that point, but a pretty a bounce with some intensity, right? We didn't. There's a decent sized wick down here. It bounced and closed higher towards the end of the week. It's not like we have a big long red full candle where there's no real wick at the bottom when we closed at the bottom of the week, right? We've saw the bounce in the middle of the week, and then the continued, we're still in this continued momentum going up, right? At the same time, just like we were talking about on the day, just now turning around the trend on the day, we do need to, we're not turning around a trend on the week, right? We're still in an uptrend on the week. This is a clear higher low. It's not a 3 candle, an engulfing candle. It's not a soft higher low. It's a solid higher low, but we are watching for any lower highs, right? We still have some resistance to get back through. And, any lower high on the week chart could signal the start of a downtrend, right? So we got the higher low. That's great. But if we get a lower high and then we drop back down and we get a lower low, right, now we're in the start of a downtrend on the week, right? I'm not calling for that. I'm not predicting for that to happen. What I'm doing is just being cautious that I am ready if that does happen, right? So we continue to play things intraday. We continue to monitor the swings that we're already in, the leaps that we're already in, and we just wait until we get some more confirmation, right? Once we get that higher high on the week chart, especially, that's where we would want to start adding more, June 26s, adding more 27s, and mid to longer range contracts. And then especially if we get the continued push up, maybe any pullback in this level is an area of support, and we get another bounce, that's where we can add again there. But just continue to monitor what we were in from, levels down here and levels down here, still sitting in good position, and just continuing to, we've been dipping our toe in. We talked about it in our videos last week. We added more December monthlies. We didn't add any today. We just monitored the ones that we were in, and just continuing to watch things go up, right? So things definitely turned back around from the day perspective. The week was never in a downtrend. Yes, it was a decent pullback, but it was never in a downtrend. So, we've talked about that for the past few weeks. Nothing to be afraid of, and, kind of wanted, right? Gives us better entries on those more short to midterm contracts like we have with the December monthlies, right? So going to the month chart, right, we can see last month, let's get a little clearer chart here. Last month was a solid 2 down, right? Not an engulfing candle, but a 2 down. So if we can push up this month and go above last month's high, we lock in November as a higher low, and we continue the uptrend on the month perspective, right? So if we do that, obviously not a lot of magnitude on the 2 down, 2 up reversal, but it just continues the momentum for what we already had started and trying to reach that 70.08 target at the end of the day, right? The same thing for the quarter. Let's go to the quarter, right? We're back in force, right? Here's the 1 combo 2 down, combo 2 up, and as long as we're above this 36.15, the high of the first 2 and that combo 2 down, we're still in force. And that 1 combo 2 down has a magnitude of 70.08. So we just want to remain above that 36.15. As we get towards the end of the quarter, we'll start to see how that candle structure is. If we get some more pullback and maybe even this turns red, then we might have to look out for possibly going 2 down in the first quarter, creating a lower high after a lower low, starting a downtrend on the quarter. That's a ways off, and I'm not saying that that's going to happen, especially with the momentum that we've got. But it's again another thing that you have to be aware of, and you have to be ahead of time. That way you're prepared if it does happen, right? I'll be very glad if it does not happen, right? If we go to the downside and set a lower high on the quarter chart, that not only does that not bode well for any leaps that I have on SOXL, but that's probably going to be reflective of the market overall. And so my overall portfolios are going to be going down as well. So it's not something that I would want, but I'm definitely aware of it and will be ready for it if that were to happen. But for the time being, right, we're still in this one combo 2 down, combo 2 up, looking to get that 70.08. And on the year, we've talked about this before, right? We turned around the 1, 2 up, 2 down, giving us a higher low on the year chart, pushing up, trying to close at the high of the candle. That way we have the easiest chance or highest chance possible of going 2 up at the beginning of January, triggering that 2 down, 2 up very early and giving us a lot more time to run and find this 70.08 magnitude, right? Once we reach that 70.08, we're up towards all-time high territory, 74. Once we get above 74, we're in all-time, blue sky territory. So we'll address that if we reach that, but or if and when we reach that. But for the time being, things just look good from the year perspective as well, right? After a shaky start to the year, things have definitely turned around and we're shaping up nicely. All right, so for anybody who's wondering, short term, I am bullish, slightly neutral after the way that today closed, just as far as looking for a possible pullback on the day chart. But otherwise bullish from the week and up, still bullish, right? I went neutral last week with the possibilities of some of the things triggering that we talked about last week. But again, I although I went neutral, I never went bearish, and I continue to restate that the pullback was nothing to be worried of. So I hope that answers any questions for anyone who still wonders, where I'm standing. Bullish at this time. So I'm not saying we're going to the moon right now, but we've got way more bullish indicators than bearish indicators or even neutral indicators. So neutral at worst, but leaning definitely bullish. All right. So let's get to the 4-hour markers and the triggers and targets for Tuesday, December 2nd. All right, let's bring out the chart here, and we'll look at things from a scalping perspective first, because again, that's how we want to try and at least attack the day and maybe get in a little early on whatever the trend is going to be for the day. But for now, oops, I forgot to change the overnight high and low. Let's just say the overnight high and overnight low end up being here and here, just kind of like how it ended up this morning, right? We had a little bit of a push to the downside, making the overnight low farther magnitude from the close price than the overnight high, right? So same type of thing. But if we're looking at price action in the morning, and let's say we open again, more towards the bottom of the bottom third of the overnight range, right? Say we open here. If we open and push up, maybe get a rejection off of last week's high once again, and we push down and get that higher low at or above opening print, just like we did this morning, then we will want to look to get into calls. Once we get into the calls, those targets are going to be the overnight high and previous high a day, right? Same with the other side of the coin. If we open here, we push down, maybe we get a bounce off of overnight low and we push back up, but we get a lower high at or below this opening print level, then we want to get into puts, targeting this overnight low and then previous low a day, right? And, the week flip is here, week and month flip actually, because it's a new month, new week. And so I want to keep that in mind. That's probably going to be a pretty good support level as well as we approach that previous low day. They're essentially the same level. So if we do get that pullback, that would be the first place I'd be looking for a real bounce, right? It's lining up kind of with the 61.8 fib of the October range as well. So we'll see how everything goes. But that's how we, the proven repeatable strategy for scalping, especially in the morning. Higher lows at or above opening print. Look to get into calls targeting overnight high and previous high a day. Lower highs at or below opening print. You want to get into puts, looking for overnight low and previous low a day as your target. All right. So now let's go to more of a more of a full day trade type of trade. Let's go to the 4-hour chart, and this is where we would also turn to if, say, we got into those scalps and price went above previous high a day. Well, from that repeatable strategy, that previous high a day would have been the max target. But if you want to continue to stretch things out, if price has momentum, there's nothing not making lower highs and lower lows triggering some type of reversal, and you can extend, and we can look at the triggers and targets from the 4-hour perspective, right? We talked about how earlier about how today ended as a green three, or bullish engulfing candle, followed by a failed 2-up, right? So price went above the high of the first 4-hour candle of the day, but it could not sustain. In fact, it wasn't even like a doji, right? The candle turned from green to red and closed below where it opened up, right? So that exposes us to a possible 2 up, 2 down in the morning, that first 4-hour. That would trigger at the low of the second 4-hour candle of Monday, and the target or the magnitude of that move would be the previous low a day. All right, so decent amount of money that could be made here, right? If we trigger at 41.22 right down here, and the magnitude is 39.46, you've got more than $1 worth of movement. So, you get multiple contracts, you're at the money, in the money. That could be a decent day of profit for you. At the same time, if we just continue to move to the upside, that gives us a 2 up continuation. Obviously, we've got the gap fill here. We could get the gap fill and then reverse, or we could just continue to push through. And we're looking at the 100% fib extension of the April bull flag, right? So that could be a point of reversal. You can see how it's been support resistance level over here a little bit, but doesn't mean that we have to, things have to reject there. We could continue to move up, and then you'd look at your market maker's expected move high, at least from an intraday perspective, as your next target, right? We've talked about before how that's not an end-all be-all level. Doesn't mean price, if it gets here, it has to reject and fall back down or even move sideways, right? It's just a level of inflection that you want to know about, and especially intraday, a great point of possible reversal, right? Let's go to the day chart. If we're looking for, the full day trade or overnight swing, maybe a couple of night swing, right? We've got the 2 up on the day, a little bit more wick than we might like to see on the day, but a solid green candle and closed right at last week's high, right? So if we do push down tomorrow, right, if we get that 2 up, 2 down, and we reach the previous low a day, if we continue to go below previous low a day, that triggers a 2 up, 2 down on the day chart. Now, not a lot of magnitude there, because the magnitude is just the low of the candle to the left of the 2 up. But if it reaches that and continues to press down, now we're in a combo 2 up, combo 2 down, or combo 2 up, 2 down situation, where the magnitude is then the low of this 2, right? The top of this gap. So could see some momentum, especially if we get through these support levels right here with a little bit of momentum. I could definitely see us going and testing at least the top of the gap again, if not reaching into the gap. Okay, that goes also to what we talk about every week, how the previous week's 50% level is usually brought into play, right? 9 times out of 10, really 10 times out of 10, right? It's do we go back to that level? Are we going to test it again? If we do test it, do we get a good bounce off of it? If we get a good bounce off of it, then that usually means that we're going to continue that, push upwards. If we come down and we hit and we kind of move sideways for a day, a lot of times that can be an indicator that there's going to be chop for the week. So we could go above and below for the rest of the week. If we go through and we just fall through, now we're looking at it being as a level of resistance if we do get some type of bounce. So last week's 50%, we talk about it a lot every day, and you can see how it comes into play. So that is, don't take out, just it lines up with a lot of levels of support as well, right? So market makers expect to move low, the low of this gap. So, I would expect that this would be, even if we get some good momentum when we trigger this combo 2 up, 2 down, I could see this as a definite bounce point for a more solid higher low on the day chart. Because remember, again, this is a soft higher low. It's part of a 3 candle. So if we were to get a solid higher low here, I would definitely look to enter more long positions going up, right? So let's just go back to the notes here real quick and just look at the hard numbers, right? So if we're looking at notes for Tuesday, December 2nd, on Tuesday, December 2nd, there will only be 20 days left in the trading days left in 2025. So we want to keep that in mind. We want to finish off strong. The close price on Monday, December 1st was 41.31. And now that the week has opened and the month has opened, we know where that flip level is at, right? So the opening print today was 39.59. So because this was the first day of the week and the first week of the month, that set the opening print for the week and the month, right? So not too far to go to fall back red, so just want to keep an eye on that. But we are green on the week and the month, giving us a full time frame continuity to the upside, meaning the week, month, quarter, and year are green, right? We know what the expected move is for the week. We talked about that in the weekend video. So that gives us that range of 45.44 to 37.08. And of course, we know where the gaps above are and gaps below are, right? We want to know where those magnets are at. We talked about from a scalping perspective how we look for higher lows at or above opening print to get into calls, targeting overnight high and the previous high a day. And we talked about getting into puts by looking for lower highs at or below opening print, right? And again, for those puts, the targets will be overnight low and previous low a day. All right. Now, from the 4-hour perspective, we talked about how there is a possible 3 2 up, 2 down on the board. So if that first 4-hour candle tomorrow goes 2 down, right? If we go below 41.22, there is a magnitude of 39.46 for that move. So pretty decent move. Now, again, we have reverse trend. Now we're in an uptrend on the 4-hour in 1 day. So if it's not going to reach its magnitude, I see 40.15 as being a good level of support where it could bounce intraday, right? Now, if we continue to the upside, instead of doing that 3 2 down, 2 up on the 4-hour, it's just a 2 up, 2 up continuation that triggers at 42.36. And we've got extended targets of 42.85 and 43.37 if that were to trigger, right? So that's the 4-hour chart. If we're looking at the day chart, right, if we breach Monday's low and we go 2 up, 2 down, so if we go below 39.25, that trigger, the magnitude is 37.30. The target in between, because we are in that uptrend, is 38.77. And if we do find some momentum and get a bigger move to the downside, if we reach that 37.30 magnitude, we've got an extended target of 36.45. And then to the upside, what happened here? This should be the trigger. There we go. All right. I don't know why my trigger was off there, but if we do get the trigger to the upside, right, that gives us 2 up, 2 up continuation at 42.36. That gives me some extended targets of 43.37, 43.80, and 44.63. Okay. We'll stay here. Won't go back to the charts. Looking at the week, we can see we already went above that 41.33 trigger. So I have underlined the 2 up, 2 up. It is not in bold because we are just slightly below the trigger. So technically we're not in force. But because we did trigger that, we've got to look for our extended targets here of 43.80, 45.52, 46.79, and 47.78. I don't think 43.80 should be too hard to reach if we continue this momentum to the upside that we have. 45.52 is probably where we might top out. But 46.79, that's last year's 50% level. So I could definitely see that being a level of resistance if we were to reach that level this week. Doesn't mean that I think that we're going to just get rejected by that and turn down from there next week. I just think that we'll see more sideways action at that point. But I do, again, I've said I'm leaning bullish, so I do expect us to, not necessarily this week, but in the next coming weeks, break that 46.79 level and get us back above last year's 50% level. All right. Again, the new month just started. If we get above 50.19, so we're inside on the month, but we are green. But if we get above 50.19, that triggers that 2 down, 2 up. Not a lot of magnitude there, like we talked about when we were looking on the charts earlier in the day, or I'm sorry, earlier in the video. Only a magnitude of about 60, a little less than 60 cents. But if we do reach that, we have some extended targets listed here as well. At the same time, if we do turn back to the downside and before we reach this 50.19, if we reach 28.12, that triggers a 2 up combo 2 down, and we're looking at actually a slew of 2 up 2 downs due to the multiple 2 ups on the month chart. I don't want to say a slew, but 3 in a row. That would give us a magnitude of 23.80. So don't expect that to happen, but we've got to keep our eyes peeled in case we do start to go back to the downside. We talked about on the quarter, we went 1 combo 2 down, combo 2 up. We're back above this 36.15 level, making us back in force on this level. That's why I've got it back in bold and not just underlined. Right, we reached these 2 targets previously, but we're back below them again. So just trying to reach these targets once again on our way up to the targets that we have not yet reached, and then ultimately the 70.08 magnitude. All right, so the year we turned around this 1 2 up 2 down, like we talked about earlier. We made a higher low so far, just trying to close as high up in the year candle as we can to give us the best possibility of going 2 up as soon as possible in the beginning of 2026. All right, that would trigger that 2 down 2 up on the year chart, and then we would have the 70.08 magnitude for that move, which would be the same as for the quarter. So we would get those time frames aligning even from a magnitude perspective as well. So I do think that that's the direction we're going to head. We've just got to be patient and see where things go. No Fed meeting this month, so or no Fed rate decision this month, so don't have to worry about that. And yeah, we'll just continue to be patient, just continue to watch those longer positions that we have, and watch for that solid higher low on the day chart to give us a more solid indication that we are in an uptrend, especially if we can get that higher high on the week chart. Then we're moving at that point. So just continue to stay patient, stay vigilant, follow your rules, be disciplined, and everything should move smoothly, smoother than I can talk. Anyways, we'll go ahead and end the video here. We'll end it just like we do every day. If you're watching this Monday night, we hope you get some good rest tonight and wake up refreshed tomorrow. If you're watching this Tuesday morning, we hope you got some good rest last night and you woke up refreshed this morning, and we look forward to getting out there and trading with you.